Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick and Scarlet Fu, we're counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast with Massar and Tim Stenovec. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube and on Quick Take. Carol, this is the time where we normally parse the most crucial moments of the day. Pick one crucial moment of today.
It's the J Day.
Oh, I thought you were going to say CrowdStrike earnings.
Okay. I mean, think about how the narrative has changed in the markets. I mean, what a risk on trade today. And we're talking about the S&P headed for its longest monthly winning streak since August of 2019. We're looking at the Dow, maybe a new bull market. I know you don't love the Dow maybe as an indicator, Romaine, but, I do wonder about technicals, what kind of new technical levels we might be taking out because of this move up in stocks.
I will say, though, real quick, Tim, about the Dow and Dow Transports. I mean, they've really been leading the charge really over the last month and a half or so. And I wonder what that says about investor sentiment.
Well, we just had a market guest who said one of the reasons that they like some of the retail sectors was that Amazon specifically talking about, that freight costs and things are coming down and that you're going to see companies benefit as a result of that.
That was Nicole Webb, Senior Vice President and Financial Advisors at the Wealth Enhancement Group. And Scarlett, we talked to her about what things are going to look like next year and what she's predicting. She thinks that we're going to see rates go to above 5, or that a higher terminal rate will have to go for longer. And that could lead to an earnings shock. But she said that the market's going to trade in a somewhat tight range with these suppressed earnings. But I got to throw a curveball here, because the most interesting thing that I thought I heard from her was a prediction that Jeff Bezos is going to come back as the CEO of Amazon. That's the prediction that she has. Yeah, she said, I love a boomerang CEO. Howard Schultz, Bob Iger. She says she thinks they're going to see it with Amazon.
What's old is new again.
Yeah, why not?
Exactly.
Everyone just come on back. All right, let's walk you through the numbers here. We do have a lot to parse. The Dow Jones Industrial Average higher by about 700 points, or about 2% here on the day. The S&P is going to finish higher by about 3% on the day, back above that 4,000 level, and more importantly, at 4,079 and change, back above its 200-day moving average. The NASDAQ Composite higher by 4.4%, 484 points added to that here on the day, and the Russell 2000 not sitting out either, up about 2.7%. And I should just point out, Carol, here, on a monthly basis, pretty strong gains across the board. I won't go through all the numbers, but roughly about 4 to 5% across the boards on a monthly basis. And that's actually setting us up for a 2-month gain right now for most of these indices and average, now in the double-digit percentages. And I'm talking like 13, 14, and in the case of the Dow, 20% gains. So if this actually sustains itself through December, this is going to end up being one of the best quarters for equities that we've seen in years.
Yeah. Jay Powell may have not said pivot, but it does feel like there's a bit of a pivot in investor sentiment. And here's something I want to just, layer on. Look at Meta today. It's up almost 8% in today's session. We know it's been beaten down this year, but I do feel like, Scarlett, it speaks to investors willing to kind of wade in on almost every name that's out there, despite questions about the future.
And sorry, Scarlett, just one other quick superlative. The Dow Jones Industrial Average did close up by about 20% off of that low that was set back on September 30th, up 20.4% if you want to be exact. So at least on a technical level, Scarlett, now flipping into a bull market.
Okay, Romaine, there's some love for the Dow from you.
Well, I wouldn't say it's love. It's more just, pointing out the facts.
Begrudging acceptance. How about that?
Thank you. Scarlett.
Sorry, Scarlett.
Yeah.
All right, you talk about the technical bull market and the Dow Jones Industrial Average. You look at the S&P 500, green across the board here. As we look at the 24 industry groups, and Carol, you mentioned Meta. That shows up here in media and entertainment, and of course, the communications and professional services. Like basically, a lot of the beaten down big cap stocks are all reflected here with gains of better than 4%.
All right, so let's get to some of the gainers, folks. There was a lot to choose from, and it certainly changed in terms of the top performers in the major indexes as a result of Jay Powell's comments. But Estee Lauder, #1 in the S&P 500 today, best performing stock in that major index. Some parts of China, where the company typically generates around 1/3 of its revenue, ease COVID-19 restrictions. So we saw some enthusiasm over that name. Intuit, also a top gainer in today's session. You can see that stock up more than 7%. That company coming out reaffirming its profit forecast for next year, 2023, and that overshadowed its reduced revenue view. It was all about the outlook for that company. And then Woof, we're talking about Petco, health and wellness, soaring. It was up more than 17% at its highs today, finishing the day with a gain of more than 16%. Reported comp sales for the third quarter that topped the average analyst estimate. It did trim its adjusted earnings per share view for the year, but it did reiterate its outlook for a net revenue. So, man, some big outperformance, Tim.
Okay, a lot of green on the screen, but it wasn't actually too difficult to find some underperformance. We look no further than cloud stocks, cybersecurity stocks today, specifically CrowdStrike Holdings, finishing it down by 14.75%. We can go ahead and round that up to 15%. It gave a revenue outlook for the current period that fell short of estimates. We saw other decliners in the space as well move lower as a result. SentinelOne, Zscaler, Palo Alto Networks, and more. And then NetApp finishing it down by about 5.8% today. It's a storage and data management company. Adjusted EPS for the third quarter missed the average analyst estimate, as did net revenue. So we saw shares move lower. And then Hormel Foods dragging down the S&P 500 today, or weighing on it, I should say, down 2.5%. Its fiscal 2023 forecast for net sales and earnings per share missed the average analyst estimate. You know Hormel, they make Spam, they make Skippy peanut butter, and more. They saw, interestingly enough, particularly weakness in the area of Turkey as a result of the outbreak of avian flu, Romaine.
Yeah, and we're going to get to yields in a second. I do want to point out to folks, Salesforce earnings are crossing the wire here. Just going to give you the top and bottom line numbers here. On a basis, it does look, at least with regards to the fiscal 3Q numbers, sales coming in at $1.7 billion. That's pretty much in line with what the street was looking for, and the company's sticking by its full-year revenue forecast for about $30.1 billion to $31 billion here. As far as the EPS itself here, adjusted operating margin came in at about 22.7, and EPS at $1.40. That's versus $1.27, and a little bit higher than the estimate. Shares moving all over the map here on the day. Now, other earnings that we're going to need to parse in a second, but before we get to that, I do want to go back to the yield picture, because this was a pretty significant move down that we saw in yields today, with the 2-year dropping by 14 basis points today, as market now repricing its expectations, not only for that terminal rate, but for really, I think, a lot of the interim in between. 4.33 on a 2-year, 3.63 on a 10-year. That's down about 11 basis points. And even at the longer end of the curve, a 20-year and a 30-year, down about 6 to 5 basis points at the longer end of the curve here. So market repricing, guys, both on the equity side as well as what we're seeing now in fixed income as well.
Yeah, Romaine, a very significant reset when it comes to the yield think, when it comes to U.S. Treasuries. Speaking of rethinks, check out Okta in the after hours. This stock has been soaring following its results because it looks like it's beating on all metrics. First of all, I want to go to the outlook because that's always key. Okta up about almost 13% in the aftermarket. Let's talk about the fourth quarter. And again, this is cloud. This is about authentication. This is about privacy issues for companies. Okta seeing fourth quarter adjusted EPS 9 cents to 10 cents. The outlook was for an estimated loss of 11 cents a share. So that's very significant in terms of a difference. Third quarter revenue was a beat, $481 million versus the estimate of $464.2. And then if you look at third quarter adjusted EPS flat, the street was looking for a loss of 24 cents a share. So that's a big, change in terms of expectations. And again, plays in the cloud. And this is why what we get from Okta, what we get from Snowflake, what we get from Salesforce, because the cloud area has been beaten down, Romaine.
Yeah, Scarlet, I think other earnings crossing
Yeah,
as well.
Snowflake just came out, and we're looking at the stock falling in after hours trading after its third quarter revenue beat analyst estimates, but the fourth quarter revenue forecast is the issue here. 535 million to 540.
Yeah.
The consensus was 551.
Sorry, just need to go back here to Salesforce. We're now learning that Brett Taylor, the co-CEO over at Salesforce, is planning to step down. Just to be clear, Brett Taylor, we're learning right now, Salesforce vice chair and co-CEO, is stepping down. Remember, him and Mark Benioff had been sharing duties here, and there had been a lot of questions about whether you needed that co-CEO role, though I think, if I'm correct, some investors thought it would be Benioff that maybe would be riding off into the sunset, maybe reducing his workload, but now we're learning that Brett Taylor is leaving, guys.
The former CEO is always going to be the new CEO. That's
the new thing, right?
Yeah, that's been repeated a couple of times here.
Yeah. But he's not named Bob, so we'll see how this one works out.
Well, it's tough being a co-CEO when Benioff is there, right? I mean, the guy who's so identified with this company, and, it's a company that's known for doing these co-positions, but I think many would say it's very tricky to run a company.
Oracle
Here's
also
what he
did
said.
the co-CEO thing, too. It's a software company.
Who's that, Scar?
Oracle also did this a while ago.
That's right.
Yeah.
Here's what Brett Taylor said in a statement, quote, "I'm grateful for 6 fantastic years at Salesforce. Mark was my mentor well before I joined Salesforce, and the opportunity to partner with him to lead the most important software company in the world is career defining."
Carol?
All right, guys. Yeah, we're going to run.
Okay.
Lots of We got to run. Lots of earnings in their moving stocks, guys. It'll carry over to that Thursday trade. That's a wrap. Beyond the Bell, cross-platform coverage, radio, TV, YouTube, and on Bloomberg Quick Take. We'll see you tomorrow.